Your books aren't a business's books. Restricted money has rules. A business spreadsheet has one pot of money. You have several, and some of them are not yours to spend. When a donor gives $500 for the food pantry, that money is legally constrained. It may only buy food. When your board sets aside $12,000 as a reserve, that money is not constrained at all, because the same board can unset it at the next meeting. Those $2 look identical in a bank balance, and they belong in different columns of your financial statements. A checkbook balance answers exactly one question: how much is in there? It cannot answer the only question your board and your donors will ask: how much of it is ours to spend? Meet the sample file that ships inside. Cedar Hollow Family Center is shipped sample data, not a real charity and not a customer. A 9-year-old 501c3 in Ohio, running a food pantry and an after-school program, with the books closed through June. $106,195 of revenue, $89,712 of expenses, and $117,933 of net assets. Of that $117,933, $72,450 is with donor restrictions. $45,483 is without donor restrictions, and of that, $17,000 is board designated, which leaves $28,483 genuinely undesignated. Only a donor can create a restriction, and only at the time of the gift. A board designation is a promise you made to yourself. A donor restriction is a promise you made to someone else. Only one of them is legally enforceable, and it isn't the board's. Under the standard, every expense is reported in net assets without donor restrictions. All of them, always. So restricted money reaches an expense by being released into the unrestricted class first. This period, Cedar Hollow released $22,670 across 10 entries, and the effect on total net assets is exactly zero. Skip that entry, and the unrestricted column carries an expense that no revenue ever arrived to cover, while the restricted column still holds money for a purpose you already paid for. That is why so many small organization statements never tie. $50,000 is not last year's number. It is a 3-year average. Cedar Hollow took in $31,203 years ago, $38,602 years ago, and $49,400 last year. So last year it filed the e-postcard. This year gross receipts are $162,000. The 3-year average is $83,333, and that door has closed. Under $200,000 of receipts and under $500,000 of assets. So it files a Form 990, easy, due the 15th day of the 5th month after year-end. There is no late penalty on a 990N, which is exactly why it gets forgotten, and 3 consecutive missed years ends the exemption automatically. There is no penalty on you for a missing acknowledgement. The donor simply loses the deduction, which is exactly why the treasurer owns this. 130 gifts are logged. 53 of them are $250 or more, the line where a written acknowledgement becomes mandatory. 3 are quid pro quo, a payment over $75 where you gave something back, so the value has to be disclosed and the deductible amount limited. 4 acknowledgements are still outstanding, and the file prices that at $4,062 of deductions your donors would lose. And beginning in 2026, a donor who does not itemize can deduct up to $1,000 of cash gifts, or $2,000 jointly. So people who never asked for a receipt are about to start. Cedar Hollow holds $113,173 of cash. Take out the $72,450 that belongs to donors, and the $17,000 the board earmarked for itself, and what is actually available for general expenditure is $23,723, 1.6 months of runway, or 2.7 if the board undesignates its own reserve. That subtraction is the liquidity disclosure the accounting standard added, and it prints on a single page you can hand across the table. For 1,522 formulas across 15 connected tabs. Before filming, the workbook was recalculated clean, 0 formula errors, and passed 1,523 out of 1,523 independent math checks. All 5 tie checks read 0. Every screen in this video is that real file. Now the part that matters most. This is a bookkeeping tool. It is not tax, legal, or accounting advice. It does not produce audited financial statements, and it does not file anything for you. Everything that varies by state, charitable registration, audit thresholds, raffle law, sales, and property tax, is a field you fill in, not a number this file prints. Nothing here promises you any outcome. Confirm your own figures with a CPA who works with exempt organizations and at irs.gov. Type each deposit and each payment once, tag every fund, and record the release when a restriction is satisfied. The fund balances, all 3 statements, the functional expense matrix, the budget comparison, and a one-page board report all follow from that. The command center is $33.97, one-time, free lifetime updates, Excel and Google Sheets. Tag the money. Tie the statements. The link is in the description.